What would your life be like if prices doubled or even tripled from here? You came here for the truth, so let me unveil that for you. We're going to explore that today. I'm going to show you what's happening, the jobs numbers, the inflation numbers, but what's going on. I'm going to explain it in detail, but we'll make it real easy, real simple. The first thing we need to look at is the data that they're pushing out there. And I've seen the economists pick it up. I've looked at government officials picking this up, and of course, making its way all the way down the ranks. But I want to show you what's actually going on. It's going to make a lot of sense right here as we begin to talk about inflation. Inflation was flat in October from the prior month. Core CPI hits a 2-year low. I'll give you the charts in a few minutes, but there are a few things that you need to know. US inflation broadly slows, erasing bets on more Fed rate hikes. And that's where this all begins. Because if you look at the data and you see it, the market reacts positively. The stock market loves basically all information. You fire people, hey, fantastic. Why? Why would that happen? It's because you want to cut costs. Oh, that's right. Shareholders love cutting costs. Facebook started to go up when they started firing people. And that's an important difference in what you would think would be a normal, healthy growth. That's not the case. Look, the economy is reliant on something that's very simple. And yet we get all of this information coming through that just makes it so complicated. Look, they want easy money. That's it. Stop going out there and trying to learn all these little intricacies and everything. Believe me, I've been studying way too many hours over the years. And while, yes, in one hand, it's something that I enjoy, I realize much later on that what you're being fed is really just convoluting the entire story. Easy money runs the show. Follow the money. Easy money runs the show. Let me get into it. Media jobs slashed amid soft ad market. We're seeing this everywhere, of course, all over the place. Walmart sounds a note of caution on consumers ahead of the holidays, and the shares fall as a result. Now, you might not be shedding a tear for the Waltons, I know, but we need to understand that this is now affecting the customers. Clearly, very clearly, anecdotal evidence has been popping up everywhere. Restaurants are slower. There's less business being done. I'm noticing the imports. I'm noticing the exports. One after the other, after the other. And just recently, we had the leader of China coming to California and meeting with a whole bunch of people, including all the business leaders. And what was it all about? Getting the economy going again, because they are too connected. China and the US, whether we like it or not, they are completely reliant on each other today. And you're probably asking yourself, what does this have to do with me, buddy? I don't know what you're talking about. It makes a lot of sense when you start to realize what comes next. Can you figure it out? Let's get into it. I want to show you. Rolex, Patek Philippe prices hit fresh 2-year lows. The subdial index, you've probably heard of this. I've shown it on the channel before. You had all these gurus on YouTube talking about their watch portfolio, how it's worth. Iman Gaji's telling you he's got a $2 million portfolio, a $3 million portfolio. Oh, it's so fantastic. Yet, based on what prices? Are you using retail prices or the secondary market? Because the secondary market has plummeted. All of that growth that came during the frenzy has been erased. So what prices are you using? It's nonsense. Look at the real data. It goes on. Burberry profits slide as luxury demand weakens. Of course, there's a lot here to do with China because the Chinese buyers are not in the market like they were before. Very important stuff. And now we need to ask the question, what's next? No, we don't need Drake to tell us that. We can learn that on our own, or I can tell you right now. Understand that it's important to know what comes after. What do we have? I'll show you more charts in a second, but understand the basics. We've got many deflationary events that have taken place over the last little while. And the response to that, always, inevitably, mostly, it's been going on for 100 years, but mostly since 2008. And we have been having all sorts of calls for additional easing, additional policy measures. And if you can believe it or not, the QE that's been going on, right? Money printing. The ECB has even said that we want to make this a permanent fixture. We want to continue to hold this stuff on our balance sheets forever. What does that tell you about the soundness of this financial system? That they are willing to degrade your hard-earned savings. This is a joke. Unfortunately, it's not funny. I mean, I'm laughing now, but this is the way it goes. Understand something. There are deflationary factors. There's economic growth right now that is slowing down, no question about that. And inflation is falling based on their metrics. When you use the CPI, the core CPI, it's still not at that 2% level that they want to achieve, that they say they want to achieve. And it needs to get there in order for them to achieve their goal, right? But there's only one possible ending to this story. Do you know what that is? Well, of course. This is the response. For every action, there's an equal and opposite reaction. You've heard this before. I believe it's Newton's third law. And what that means in relation to the economy, in relation to the financial markets, is that what we will see in the coming time are more deflationary factors coming through, one or the other, or disinflation, as they like to say, like inflation slowing down, that giving them the excuse to begin to cut interest rates, because what they determine is something called a neutral rate. Neutral. So they don't want to be restrictive, and they don't want to be too loose. And this is based not just on the Fed funds rate, but that's one major factor. So they can opt to bring interest rates down to, just a slight little bit if they want to, and they can make an excuse for that and all of that. We get that. That's fine. But in doing so, historically, every time, if you look at the Fed funds rate over a period, what has happened is that an event occurs which causes them to cut interest rates. How often in history have we seen central banks, not even the Fed, like go back in all of history, where nothing really happened? Like it's just kind of, okay, I think it's time to cut interest rates now. And they just begin to bring interest rates down from, let's just say, a reasonable level to an unreasonably low level. It's not, like, to my knowledge, I've read a lot. I don't know everything, but that doesn't happen. There's always a catalyst. There's always an event. And so we need to wait for this. We don't know what's going to happen with this, but that's the situation today. You might be thinking to yourself, I'm going to wait and I'm going to see when real estate prices decline considerably, 50%, 75%, whatever the case is. Inventory is going to pile up everywhere, and I'm going to walk in, scoop it all up, and I'm going to look like a genius because that YouTuber told me to do so. Understand that if you see prices going down by 50%, by 75%, whatever it is, whatever you're being told, there is chaos. There is a big problem. During the financial crisis, we can all look back in the rearview mirror and realize, oh yeah, that was so obvious. But at that time, very few were in the position to say, you know what, this is the right time to buy. All heck was breaking loose. Nobody felt sound. It seemed like even though the stock market started going up again, real estate was still encountering a problem. So they didn't feel comfortable buying in. Now, some people did. Some people took that risk. But the majority of people watching real estate prices fall and continue to fall, and of course the mortgages, everything connected with it, they didn't just say, you know what, I think now's the right time. People didn't see that. And that's why we got to be aware of this. This kind of thing is happening today. So a deflationary event is met with a policy response from the Federal Reserve and from the government. And that will create more and more inflation. And you will see potentially a doubling, a tripling of prices. Who knows? Where will this come from? Where will it land? Nobody can tell the future. Okay, nobody can tell the future. And what we do know historically, we use that data, we pull it up, and what does it say? The central banks will devalue your currency. You save, you work hard, you do things for yourself and your family, and what are they about to do? They're about to eradicate that. They're about to eviscerate that. How does that make you feel? What do you think you would do if you were put in that position? You and Jerome Powell, you and Janet, my favorite, Yellen, in a room together, just the two of you. What would you do? Well, I know what I would be doing with Janet Yellen. Oops. Look at this here. You can see the charts, right? Well, let's take a few. Shelter and rent inflation, year-over-year change, that has come down. This is year-over-year change, mind you. But at the same time, prices, we have come off the tops a little bit in most cases. Rents probably near their all-time high. I mean, depending on where you look, it is truly excessive. Many have said that inventory will pile up. We have not seen that yet, although we are off the bottom. Looking at headline CPI, you could see the chart, just the same information from before, looking like it is trending down. Core CPI, trending down as well. So when we look at the core, when we look at the headline, it doesn't matter. All we need to know, the movement is down. Industrial production has been very weak, and this is one indicator I love to look at, okay? Because I want to see what's going on. What's the output? That tells me what's happening, the demand from the consumer. You could look at Walmart, you could look at like all that stuff, but when we're actually seeing the industrial production, that's a better signal for me anyway. And then we have autos and trucks. Looking at the demand on that as well, certainly less there, okay? So going back to the levels we haven't seen since 2020. And so all around, we are watching many different events that have been occurring. There's a mixed bag. But what I can see specifically is that the consumer is kind of tired. They're waiting and seeing when it comes to real estate, when it comes to cars, when it's come to many factors, restaurants, everything. They are kind of in this wait and see mode. What are they waiting for? They're being told there's a recession or one is coming. They're also being told it's going to be a soft landing, so not much to prepare for there. And then at the same time, they're basically saying overwhelmingly that interest rates are going to be lower next year. So why buy? Why not wait? If that's the case, if inflation is slowing down and maybe even disinflation, deflation, maybe we're going to see interest rates cut. Why would I buy a house now? Why would I buy a car now? Why wouldn't I just put off all purchases because a deflationary event is coming? Or is it inflation? This is what we got to understand. The deflation brings the inflation. I look at some of these guys out there and I think, well, anyway, the deflation won't come in the long term. Why? It's because the central banks have committed to one thing. Ben Bernanke, type this into a search engine. Ben Bernanke speech Fed 2002. And you will get the speech. It's a PDF. You could search for this, read the whole thing. I encourage you. I've brought it up probably about 100 times on this channel. And he tells you, right in the title, deflation, making sure it doesn't happen here. He goes through the things that like a 40%, I just talked about this 2 days ago or 3 days ago, a 40% devaluation. 40%. How does that make you feel? If you were sitting in that room with Ben Bernanke, what would you do? That's what's coming. I want you to get the latest and greatest information. I don't want you to get the BS. I want to cut through all that. I don't want to have to worry about the clickbait and all that garbage. When you join up with the group that we have, the Finance Friday Live, this is a small Zoom class. You ask me direct questions. We are a small group of people. I added information on the page. The link is in the description now, so it'll break that down even further. This is it, so you could see it for yourself and understand all the things. I email people constantly. They're always asking about it, and I just put that information on the page. Click the link in the description. Just hit that button right there. Join up with what I consider to be very like-minded people. It's a small group of people. Not everybody has their camera on. You can have your privacy. There's no reason that you gotta give up any privacy or anything. I hope that you'll join me either for the business side, which is on the Sunday, or the Friday, which is the Finance Fridays. Either way, I want to see you there so we could cut through the garbage, cut through the nonsense, and just get you the real data that you need to know. I hope that I will see you there. Click that link and at least email me, see what you got. And I want to do the comment of the day. Of course, I always love your comments. And you know, I request all other YouTubers to start caring about their subscribers. That would be nice if they started to care. You could see, Daniel, I want to thank you for your comment. I was at the grocery store with my wife when I saw the price of a bag of chips was $5.99. I was shocked. Since then, I've been figuring out how much I've earned in bags of potato chips. I rounded down to $5 for easy math. That's amazing. I love to see that kind of thing. I mean, unfortunate about the bag of chips cost, but that this is it's just putting it into perspective. And that's what's happening right now. Our dollars are being devalued. Don't wait for the deflation. It might happen. Certainly could happen. And there might be many events will happen that are deflationary. But in the end, they're ready to inflate your currency and not the amount of chips in that bag. Let me tell you. Well, I guess the air will be inflated, but not the amount of chips. Okay? I'll see you on the next one. Take care.